Good evening. This is the market update for Tuesday, June 4th. And as they say, all good streaks must come to an end. And today we had that fantastic record-breaking Dow streak of 21 in a row come to an end. Although, let me flip over to actually, where's the 15-minute chart? Going into the last few minutes of the day, it looked like we were actually going to put in one massive reversal that probably would have had the remaining shorts in this market go hang themselves. We were down, 150 plus points and got as far as negative 27 with a few minutes left in the day. And then the sell programs rushed in yet again, but not really a surprise. You know, we've been talking about this streak that the Dow has had going on Tuesdays over the last couple of weeks. And of course, like all good streaks and all good trends, once the main business media picks up on it, it ends. And of course, we started seeing the headlines yesterday and today regarding the 21 in a row streak. So of course, the end came. That's just typically how it is. As long as it stays off the mainstream headlines, these trends usually work pretty well. But anyway, we're going to start off today with the Dow Transportation Stock. And I purposely have not made any changes to the charts except for the 15-minute chart on the major indices, just so that we get an idea where we were on the weekend and where we are now. Here's a chart of the Dow Transports. It's really, this year has been the only indice to pay attention to. We had a test of the 50-day moving average yesterday, this blue line, and then we bounced all the way back up. And like a lot of charts out there yesterday, we put in what is called a hammer on the candlestick terms. You know, we've got a long little wiki here and then what looks like a hammer at the top. That typically signifies a reversal. If it happens at a top, the top is in. If it happens after a sell-off, it usually indicates a bottom is in and we're going to reverse. And the transportation sector actually held up pretty well, but thanks to that late day selling we're still in so-so land. The only positive being that we've gone down in the last couple of days on lower volume. RSI did break under 50, but we've got stochastics in oversold territory. And the way this market has been throughout the last few months, we could easily reverse to the upside come tomorrow. But resistance right now is right where the 8-day and 20-day exponentials are converging. So that's at 63.40, about 100 points or so higher. Dow daily chart, you can see we broke that uptrend line dating back to the April lows. That was the last time we had a 2-day sell-off in a row. We actually had a 2-day sell-off today. That's the first time did we have a 2-day? Actually, we were up yesterday, so I don't know what the hell I'm talking about in regards to that. But you can see right now we found a little bit of support at 15,150, and then we've got the 50-day moving average back down here where we could see a test. But something to keep an eye on, the MACD has gotten to extreme levels here, and each of the last couple of times we've seen that happen has been after a couple, where we've had 3 or 4 days out of a week on the red note, and then we started to rally back. We had that happen in late February. You can see we had it happen again in mid-April, and here we are again at that negative MACD reading with stochastics back down at the 20 level. We've had quite a bit of money pumped in today, last 2 days from the Fed. More money coming in again tomorrow, and we've been seeing a lot of chatter back and forth. The Fed is done, the Fed's not done, the Fed is done, the Fed's not done, and the economic data, as far as I'm concerned, still sucks. The Fed is not going to take their foot off the pedal halfway up the hill because the economy, is going to stall out. But here we are. We're not even a third of the way up a very steep hill. That's the economic recovery. And people are going, the Fed's going to take their foot off the pedal. Just absolute nonsense talk. And, we've been hearing the same kind of nonsense over the last year as the market has gone up massively. So just more of that noise out there. But, traders listen to the noise. And that's the way we are. I mean, what's remarkable regarding this market is we have a mania one day and the next day it's really dead. Then we have a mania again and it's dead. It's just, traders paying too much attention to the nonsense going on in the mainstream media. The only chart I did change was the Dow 15-minute chart. You'll recall that we were in that expanding bearish wedge, and we did break down out of it. And now we flipped into this bullish falling wedge, and again, support 15K-ish, breakout 15.25. We got to an extreme negative MACD on the 15-minute chart this morning, and you can see we snapped all the way back to a positive MACD cross. So it's, there's a couple of indicators I really, really like when we're looking at oversold levels. On the intraday charts, I talk about it a lot. It's the intraday regression channels, but on the 15-minute charts, when we look at that, some things we like to look at is when we get extreme levels on the MACD, typically indicates a reversal is at hand. Oil. Here's the oil chart, and for all this talk about the economy doing so much better, oil is still rather weak, and we could see another little test, back down here. Oil did bounce back initially today and then sold off again on the sell-off in the market. So, if the market or the economy was booming like these Fed are done clowns would be saying, we'd be seeing oil over $100 a barrel. It's simple as that. Russell chart broke below the 20-day exponential, so there is possibilities for a retrace here too to the 50-day moving average, and we're seeing fantastic momentum. But as I mentioned in the weekend video, one of the good things that's also kind of a sucky thing about this market is there's not a whole lot of opportunities to swing for long in this market. Stocks are up and down big. The sectors, the momentum sectors, are flipping back and forth. Shippers, solars, alternative energy, bio, shippers, solars, that kind of thing. And the action lasts for a day or two, and then it's on to the next sector and then back again. That kind of environment means we're playing the intraday momentum. We're not holding a whole lot of stocks. And the good thing about that is we essentially end up sitting on high cash most of the time and trading intraday. Not such a bad thing when the market is trying to decide what it's going to do, if it's going to give a retrace or not. Anyway, let's jump into some stock plays. We haven't had a whole lot of email alerts. One we had yesterday, SQNS, dog. What sucks about this one is fantastic little trading base. We bought up there at $1.60, came back on low volume, same again today. Stop and rip. It'll probably end up running again. We're probably going to have to rebuy this stock at $1.64 for that run to the 200-day moving average. But, the spike in high volume on this nice base, shame on us for chasing the Twitter post on this one yesterday. I did like the chart, and I liked what we were seeing in other companies and stocks that had a similar setup, but we lost more than we would have liked to on this one. But you got to try stocks in the market like this, and they're not all going to work out. And if we play with discipline and with stops, the few losers that we do have will be more than made up with the many nice winners that will take off. Now, even though this one triggered stops, doesn't mean we can't rebuy it again if the story turns around in the next couple of days. ETRM, monster winner for us last week, has come back over the last 3 days. We're forming a little bit of a flag here, and typically when you see a big spike like this and they consolidate for a couple of days, day 2, day 3, day 4 is when you typically see another attempt at a bounce back. So thinking that may come tomorrow or the day after. And remember, we still have that FDA filing news that could come at any day. And, that was part of the reason we had that big blow up last week. Consolidation on lower volume. Let's see if the buyers come into this one again tomorrow, or if we get some positive news and we get that nice little bounce back. HEB. Bird flu play. We also have a pickup in SARS in Europe. A bunch of new cases. Nice volume on this one today. Held up very, very nicely. Got a late day pump by the street in a small cap article. Breakout is 24 cents. Target 26, 27, 30 on the chart. Putting in very nice support around 21-ish, 21, 21 and a half over the last couple of days. Chart looks nice. RSI up through 70. Stochastics look good. Just a patience play that I'm actually surprised we haven't seen more momentum in these bird flu SARS stocks right now, but bios are still looking to get their legs. You probably need a couple of these to blow up before the sector goes crazy. That's typically what we've seen on some of the other sectors. Like we saw fuel cell blow up last week, and then that lit up all the other alternative energy stocks. So just a wait and see right now. See what the market gives us. Try not to force a lot of trades, just play the momentum that's there intraday and see what the market brings us over the next couple of days. If you've got any questions, shoot me an email, feedback, buysellshort.com. Have a great evening and see you guys in the chat room tomorrow. Bye.